Hey guys, how's it going? And thanks for coming. I'm Nick and I'm back from my trip, and this is Real Life Money, where we talk about real life and money because, you know, schools aren't. So let's get started. So in this video we're talking about the next stock market crash. October 25th 2020 is probably going to be a normal day, guys. The point is, no one could predict. Everyone has been talking about this. I talked about this multiple times. We cannot predict when the next crash is actually going to happen. Is it going to happen this year, 2019, 2020? No one knows. However, a lot of people could be seeing the end of this bull market. We are losing juice. It could be a couple more years. The fact is that this is actually a fantastic time to start preparing what to do. So I'm going to be going over what I'm doing and some things to focus on. I do have another video going into detail of specific examples of what to actually do. I'm kind of giving an overview for this and my updated plan of what I'm doing. But I will leave a link in the description if you guys are interested in that. It has a bunch of nice examples of what you can look into. So first of all, there are two main factors that we need to look at to prepare ourselves for the next stock market crash. The first factor is cash. Second factor, diversification. Both are very important for multiple different reasons. Starting off with cash. Cash is king, whether you believe that or not. But for me personally, I actually just calculated my total amount of cash is 15% of my total amount of money that I have total. And that's a decent amount, 15%. I would normally love to have basically like all of it into stocks or something like that. But because it's getting, I want to become more cautious, I want more of a cash pile. Now, why do I want more cash? A lot of people are going into more cash. Warren Buffett has a bunch of cash on his hands. So why are we doing this? Well, for multiple reasons. First main reason is to have cushion. Of course, if life throws something at you, you want some cash to actually cover that. And if you're maybe saving for something in the near future, maybe car, house, apartment, whatever, you do want some cash to actually pay for that. Now, aside from having a cushion, you also need this because there's no risk involved. The market could go down and you lose no money. Unfortunately, if the market goes up, then you don't make any money either, apart from an interest rate with savings account, which is dirt. But you will look really smart if you do have some cash on the side when the market is going down, 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 because for one reason, your cash isn't going down. Second reason, you have the opportunity to move that cash and actually buy stocks when they're down, so when they rebound and go back up, you make a nice profit. So it gives you cushion, no risk, and opportunity. I have been building up my cash portfolio for a while now. I have scaled. I really haven't sold anything in my stocks because I do still believe companies and stocks could still do well. And we're going to be going into diversification next. But I am building a cushion up just in case something happens. You do want, and there might be a correction before a crash, like we saw in February. So if there's a huge sell-off, that could be an opportunity. So then you use that cash to buy it because you're going to need money to buy stocks. So finally, diversification, actually getting into other investments and assets, and not only in stocks or individual stocks, but other companies, other industries, other investments. So for me, especially for right now, I want to focus more on especially dividend stocks, because definitely recently some stocks have been down, some have been flat, and nothing really happens during those time periods if you have like a growth stock paying no dividends. If you do have a dividend player, you continue to get money even if your stock is down, flat, or up. Now, aside from stocks and dividend stocks, there are other assets that you can buy as well, such as real estate, gold, bonds, and there are many others as well. However, word of caution for bonds, because we are in an increasing interest rate environment. How bonds work, their equation basically, if interest rates go up, their values go down. And they've been, well, interest rates have been declining since the 80s and have bottomed in 2008. That's why bond values have basically been increasing for a few decades now. However, that has been reversing for a couple of years now because interest rates are starting to go back up. That's why I do not really like bonds. Unless you own an individual bond, you will get your principal at the end of the term. Now, I'm no expert in bonds. It is good to diversify around multiple asset classes. However, since that interest rate issue, I personally wouldn't really get into bonds. I would kind of just put it in cash instead, because you could still get interest there. Like for me personally, I would look around for different banks, by the way. I know like savings accounts are paying nothing at all, but I do have a money market account for a credit union paying 1.75%. Not hitting inflation, but it's still decent. So instead of being unsure with bonds, and especially human beings as a whole are in all asset classes, and we all still have emotions and reactions. So if the economy goes down, most asset classes are going down as well. Historically, bonds could maybe return 2, 3, 4%, maybe 5%. You know, they have that interest rate, or that dividend rate, which is decent, usually more than a savings account. But that risk, I don't think it's worth it at all. So honestly, for me, I'm putting more money into cash and not really in bonds at all. Real estate, on the other hand, you could get into REITs, real estate investment trusts. More detail in my other video if you want to check that out. But you can invest in real estate similar to stocks. Their dividends are higher. They could be maybe like 4 or 5%, could be a little higher. But if real estate gets hit in the next crash, REITs are going to get hit as well. And of course, gold, when it finally crashes, gold is probably going to take off. However, in the meantime, I mean, I'm no gold professional either, but it seems like gold only really does amazing in the bear market. So it actually has to crash first, and then you might want to look into it. So for me anyway, for right now, I'm kind of focusing on dividend stocks and cash alone to keep it super simple. You're still in the market with those guys, but also no risk with the cash. Quick tip, if your savings account is paying like 0.01%, I will look around for either credit unions, those are nonprofits that usually have better rates, or maybe if you could find an online bank that might be able to pay you a little bit higher interest rate as well. I do have some growth stocks, and I'm probably not going to be selling out of them. I might be swing trading a couple stocks, but I'm kind of at this moment favoring dividend stocks over growth stocks because I'm just a little bit more cautious. I would rather be more cautious than less cautious when the crash actually happened. Now, everyone is different, guys. You could have as simple as a plan or as complex as a plan as you. I just think either like stocks versus cash is good for me. I would rather have no risk at all, and then when whatever happens, I could use that and throw it at stocks. So let me know what you guys think. What are you doing? If you have any questions, comments, concerns, please leave them down below. I'd love to hear what you guys have to say. And thank you so much for watching, guys, and I'll see you in the next one.